everything you need to know about crypto trading, basic candlestick patterns, script, word count 2,912, perfect for 20 minutes at bright, enthusiastic AI voice pace. Hey there, my amazing crypto warriors. Welcome back to Manaz Crypto Edge, the happiest, most energetic place on YouTube where complete beginners turn into confident chart-reading traders who spot opportunities before everyone else. If you're joining us for the first time, you are in the right spot at the perfect time. Whether you're a student, a total newcomer, or someone ready to stop guessing and start understanding the market, I am bursting with excitement that you're here. Go ahead and smash that red subscribe button right now. Hit like if you're ready to learn real candlestick patterns that actually move prices. And drop a huge in the comments because today we're going deep on basic candlestick patterns. This is part 3 of our massive Everything You Need to Know About Crypto Trading series. In the last video, we mastered candlestick anatomy. Today, we turn that knowledge into superpower patterns that scream, "Buy here!" or "Danger ahead!" By the end of this 20-minute session, you'll be able to look at any crypto chart and instantly recognize high-probability setups. Are you ready to level up? Let's go! 21. Doji Candlestick Pattern. Let's start with one of the most famous and powerful patterns, the doji. A doji is super easy to spot. It has a very small body, sometimes almost invisible, with wicks on both sides. The open and close prices are almost exactly the same. What does it mean? Pure indecision. The bulls and bears fought hard during that period, but neither side won. In crypto, a doji often appears right at the end of a strong trend and signals that momentum is slowing down. Single doji equals possible pause. A cluster of dojis equals big reversal might be coming. Beginner tip: when you see a doji after a long uptrend or downtrend, get alert. The market is thinking, and the next few candles usually decide the direction. You're now reading the market's hesitation like a pro. How exciting. 22. Hammer and Hanging Man. These two look almost identical, but their meaning depends on where they appear. Both have a small body at the top and a long lower wick, at least twice the body size. Hammer appears at the bottom of a downtrend. The long lower wick shows that sellers pushed price low, but buyers stepped in aggressively and pushed it back up. This is a strong bullish reversal signal. Many beginners catch their first big bounces thanks to the hammer. Hanging Man looks exactly the same, but appears at the top of an uptrend. It warns that buyers are getting tired and sellers might take control soon. Same shape, different story. Context is everything. When you spot a hammer after a scary dip, get ready to smile because the bulls might be waking up. You've got this. 23. Shooting Star and Inverted Hammer. Now let's flip it upside down. Both have a small body at the bottom and a long upper wick. Shooting Star appears at the top of an uptrend. Price shot up during the period, but sellers slammed it back down. This is a classic bearish reversal. The party might be ending. Inverted Hammer appears at the bottom of a downtrend. Buyers tried to push higher but couldn't hold it. Yet the long upper wick shows they're starting to fight back, often followed by a bullish move. These star patterns are like warning flares or hope signals in the crypto sky. Spot them early and you'll avoid traps or catch beautiful reversals. You're becoming dangerous on the charts. 24. Bullish Engulfing Pattern. This one gives me goosebumps every time. It's powerful. A bullish engulfing happens when a small red candle is followed by a large green candle that completely engulfs the previous red body. It means sellers were in control yesterday, but today the buyers showed up with massive strength and swallowed the entire previous move. This is one of the strongest bullish reversal patterns, especially when it appears after a downtrend or at support levels. In crypto's fast-moving market, a bullish engulfing often kicks off explosive rallies. When you see one forming on the 1 hour or 4 hour chart, get excited. Opportunity is knocking. 25. Bearish engulfing pattern. The evil twin of the previous pattern. A bearish engulfing is a small green candle followed by a large red candle that completely engulfs the green body. Buyers were winning, but sellers came in with overwhelming force and took full control. This is a high probability bearish reversal signal, especially at the top of an uptrend or near resistance. Many new traders save themselves from big losses by spotting bearish engulfing patterns and taking profit or staying out. Respect the power of this pattern. It has saved countless portfolios. 26. Morning Star and Evening Star. These are three candle reversal patterns that look like beautiful stars in the sky. Morning Star bullish. 1. Big red candle, downtrend continuing. 2. Small body candle, doji or spinning top, indecision. 3. Strong green candle that closes well into the first red candle. It's called Morning Star because it signals the sun is rising after a dark downtrend. A new bullish day is beginning. Very reliable in crypto. Evening Star, bearish. The opposite. Big green, small middle candle, then strong red candle closing into the first green. It warns that the party is ending and night, bearish move, is coming. These patterns are slower to form but often more reliable. When you spot a morning star after a scary crash, celebrate. The bulls might be taking the wheel again. 27. 3 white soldiers and 3 black crows. Now for the marching armies. 3 white soldiers. 3 strong green candles in a row, each closing higher than the previous, with small wicks. This shows relentless buying pressure, a powerful continuation or reversal signal in an uptrend. The bulls are marching forward and they're not stopping. 3 black crows. 3 strong red candles in a row, each closing lower. The bears are in full control and pushing the price down aggressively. These soldier patterns are easy to see even for absolute beginners and often lead to strong moves. When you see 3 white soldiers forming on the daily chart, it's time to feel bullish and confident. 28. Spinning top candles. Spinning tops are the undecided candles of the market. They have a small body in the middle with long upper and lower wicks. This means price moved both higher and lower during the period, but ended up almost where it started. Total indecision. A single spinning top is a pause signal. A cluster of spinning tops equals the trend is getting tired and a reversal could be near. In volatile crypto markets, spinning tops often appear before big breakouts. They're like the market taking a deep breath before the next sprint. Learn to recognize them, and you'll never be surprised by sudden turns again. 29. Tweezer top and bottom patterns. Tweezer patterns are like 2 candles pinching the same price